Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. You know, it's if you've been wondering why there's been lack of updates this morning from myself, that's because we're really not moving. We've moved, and then Benedict in the chat room's like, well, the euro. Sorry, it's Monday. I got a case of the Mondays. The got up way too early this morning. No, I mean, based on my alarm anyway. But Benedict was saying, oh, well, the euros actually had a nice rally overnight, and it has. I mean, we've really rallied quite a bit since the European Open. As you can see, like in Asia, nothing really happened, and then all this movement happened in Europe. But by the time we're here, I don't. It's like, well, what am I gonna say at this point? I don't think we're at any key inflection point in the euro. Now, one of the currencies that are actually moving a little bit is the euro sterling. So the euro pound is actually ripping higher, but again, we're moving up against resistance. I do think we're actually challenging this downtrend line. We did this one last week. You can see this one here. Actually, let me put it on a 4-hour chart, give you a little bit better view. So we took out this downtrend line last week, and then we failed. We came back, and that's when I drew the secondary trend line. So now we are, above that secondary trend line, and I think that we're actually breaking out. But what I'd like to see here before I get too terribly excited is probably this, just this horizontal resistance here. It comes in at 86.40. We start getting above that, and then I'll get a little bit more excited about it. I'm still long some euro sterling, not a lot, but I like it. I liked it before when we had that, what I thought was a false breakdown here. Although, I put in a pattern in play, and it stopped out the pattern in play, but I still am constructive on it. I actually think that the cable's still going to come down a little bit more, because I do believe that risk aversion tends to weigh on the sterling more so than the euro. And so as a result, we're probably going to see some more sterling weakness over euro weakness in the weeks ahead. Now, I know the S&P is up right now or today, but I still think that the S&P put in a false breakout last week. Okay. So with that being said, I still think that equities are going to be coming down over the course of the next few weeks. Even into the summer, beginning of summer, the sell in May go away, stocks might come down a little bit, and give us an opportunity for like a fall, rally in equities. So I'm not expecting anything, epic to the downside. I mean, I think the S&Ps can probably get back towards, 30, anywhere between 3,500 to maybe even 3,200, somewhere in this neighborhood. I'm not looking for anything like too epic, if you will. But let's since I'm on the S&P, let's talk about it. Let's talk about it intraday. So what we found in the S&P is we found support at the 38% retracement. So that's what's making this support level important. Let me get rid of this previous zone here. So I think moving into this week, what's going to be really important is this 38% retracement. So probably this previous high, current low, to these spikes, somewhere around here. This is going to be our new support zone, if you will. So support today is going to be 38. Let's just call it 38.90. Okay. Let's figure out where resistance is for equities this morning or today. So since I do believe we made a false breakout last week, I don't think we're going back to it because it's a false breakout. So S&Ps, this resistance should be good resistance. That's previous support. Let's figure out where that fib level is. See if we have any fibs around there. So I mean, the 50% retracement comes in right at the same level, 39.40. I bet you that offers us resistance today. Today, equity markets are, a little stronger. This morning we've bounced back. I mean, I want to say that we're pretty flat. I mean, S&P futures are up a few points. Dow's down a few points. Nasdaq's up, 100 points, which, the Nasdaq's a little stronger. But I want to say overall, we're just kind of consolidating last week's moves. And I wouldn't be surprised, being Monday, that the market's going to be up a little bit today. So we'll just have to see how the rest of the week goes. But I do think the S&P is somewhere around this 39.40, 39.60 is going to offer, some good resistance for sellers. Okay. Hold on really quick. Just bear with me. 1 second. Okay. Let's go into the euro. All right, let's start there. So the euro's bounced back. I still think that we are, bearish, and while we're below 120, still bearish. Same story as last week. So as you can see, the 120 level is still the 38% retracement of this entire move. Will we have to redraw our, pennant or flag or whatever it is type of consolidation that we're developing? Yeah, I guess we have to, because spike down from Friday, we basically opened at that gap and then bounce. So that makes this level at 118.70 really important support today. Resistance is 120, and that's key. While we're below it, it's bearish. Okay. John said opposite of the euro pound is the pound Swiss. Yes, it is. Yes, the pound Swiss is the inverse. But I got to say something regarding that, John. During periods that we're seeing right now, where we're seeing a rally in yields, I would actually more likely, if you're looking for a new trade. Well, let me just say this. If you still think that yields are going to continue to go higher, the pound Swiss might be the better long. Because the Swiss franc tends to be more yield sensitive. Okay. The flip side to that is, yeah, if stocks turn lower aggressively, then that trade's not going to work as well. So anyway, just some food for thought. Here's the cable. So the cable is trading pretty heavy. I redrew this trend line here, and I think we got to be, oops, I didn't mean to do that. I think we got to be really focused on these lows, because if we break 38.15, we should test this 37.50. So you guys know 137.50, that's really key support there, right? I know we've been talking about it a lot. So resistance, and I'm not sure why the sterling's so heavy today, but I got to think that anybody who's long will probably be happy to get out of some if we get back to 139, right? I mean, I know that's above the highs of the day. So, the highs of the day are 138.76. So yeah, if we spike up a little bit into 90, I'm sorry, 139, I'm sure, you know, anybody who's long is gonna be like, thank God, get me out of this thing, right? Because it's acting like crap right now. So I'm gonna write that down for this morning. 139. It's not great resistance. You know what great resistance is 140.15. I'm pretty sure we wrote that down last week. Let's double check where we're at here. 137.50, 138.25, 139.60. Oh, that's because I didn't think we were going to get back above that, and we didn't. But you guys know that 140.15 is really key. That's if you're bearish the sterling, that has to hold, right? Sorry, just getting a drink of my coffee. All right, let's take a look at the Aussie. So the Aussie, I mean, very little happening. I'm bummed out because I was going to take my Euro Aussie off the table long right on at Sunday night. I was going to, and then I didn't, and I should have, and you know, just to book some profits. And I'm still long the Euro Aussie. It's not a big deal, but the Aussie when it was lower at the open, I was like, yeah, maybe I should pull something. But anyway, support for the Aussie. It's the open. That's the low from late last week. Okay, so that comes in at 77 cents. That's big. Resistance. Remember we had this false breakout last week. Do you remember that? I remember it vividly because I had an order to sell the Aussie at 78.50. I was like 52 or something, and I missed my order by just a couple of pips. I forget what it was. I was trying to get in at the 618 just ahead of it. Yeah. Anyway, intraday resistance. Let's think about that. High, low. That's 77.94. So 78 cents. We shouldn't even get anywhere close to that actually. But if we do, I think that's probably a great area to be on the sell side of the Aussie. To be frank with you, you know, I think up there is going to be a better area to be on the short side. I just don't know if we're going to get there. I think we'd probably be lucky if we, you know, today got back up towards the 80s here, right? All right, let's continue on. So here's the Kiwi. Kiwi, you know, it's sucked me in on Friday for the bear flag down here at the 71. I think 71. My entry is at 71.62. So I'm short right here. I'm not really worried about it, frankly. I just think that we have to break 71 cents before this thing gets, you know, squirrely. We could make it back to 72 cents today. That's key. I actually think that the Kiwi is more bearish than the Aussie right now because of the way it's trading. You can see how the Aussie's got, you know, it's better bid, where the Kiwi is just kind of lackluster. So in other words, if you're going to play the dollar on the long side, if you're going to play the US dollar on the long side and you want to play some short, you know, Aussie or Kiwi, the Kiwi is probably the better choice here. Dollar Canadian, I still really like the dollar Canadian. I know I actually thought that this weekend we were going to be closer to 125.70 up here, closer towards this resistance. False breakdown, bottom of the wedge. I think dips now to if you get any dip down to 124.50, you've got to be on the long side down there. I'm gonna put this as an asterisk. I have to say, though, and you guys know that this is going to have to still be in a bearish designation because we are hitting lower highs and lower lows. I just think it's setting up for a really key reversal here. I do. We could, like, if we can get lucky enough. And I'm just speaking to those of you that don't have longs. And this is, for me, I wouldn't mind actually adding here. So if we have this developing, right, and we get down to this 124.50, I think this is a great place to be on the long side, because I think if you get down here, you want to be long, right? I mean, but we'll see. Resistance 125.50. Dollar Swiss. I had to redraw the bull flag. I still think that we can get to 92 cents, but I think if we get to 92 cents, this is where you want to be long. Okay. Resistance is 93.20. This is still bullish. Okay. US dollar, Norwegian krona. I think we're developing this flag. And as you know, you guys know, I think we're basing here. But you'll notice I drew this today. I do think that this is, building a symmetrical triangle, which is good if we break out to the upside. It's bad if we're consolidating for another move lower, because it could very easily be doing that. I know I'm bullish, guys, and I'm playing I'm playing counter trend, obviously. But this is where I turn really bullish, is you start getting above, I can probably do this. This is where, you got to get really back above this 870. This is the spike high at 860, 861. So I'm going to write that down, actually. Okay. 861. I'm going to keep it in range, although I'm, you guys know I'm long. I think if you can get a dip, I doubt we're going to make it down there to 843, but hell, you never know. Days like today, you just never know. This is a consolidation day. So, I mean, if you can get a dip down to 844, that'd be great. I think that'd be great. Okay. Dollar MEX. If you guys missed what I said on the webinar earlier, I had an order to add to my dollar Mexican peso, or no, did I say that in the chat room? I can't remember where I said it. Anyway, I had an order to buy more dollar Mexican peso, like here at 2059 or 2058. Where's my order right now? I had to adjust it. I adjusted it to 857 because I had it at 859 and I didn't get hit. I thought I was going to get hit. I could have sworn I was going to get hit. Oh, I said it in the chat room. And I was so irritated that, like, I got up this morning and it didn't trigger. I did adjust it a little bit lower, but I still think that we can play off of this channel, especially if stocks rally today. I mean, it's Monday, it's mutual fund Monday. Stocks are probably, you know, probably going to be bid. So that means the dollar Mexican peso could probably come down a little bit. Today, I think we'd be lucky if we got down to it would probably come down to 2053, 2052 would probably be a nice place to be on the long side. I'm going to write that down. Richard asks, is the US dollar Norwegian krona still the Wyckoff? Yes, it is, because of the false breakdown. So it is. Dollar Mexican peso resistance, let's just write down 2081. Range bound. Yes, the US dollar Norwegian krona is still the Wyckoff pattern because of this false breakdown here. This is the false breakdown, low volume. So I still think we're breaking higher, but currently we're in a little bit of a triangle. You can thank the stock market for that. Dollar Mex, let's go to the dollar yen. So same as last week, 109.30, 108.30. I still think it's bullish. The thing has not pulled back at all. All right. Dollar index. Here's the Dixie. All right. So 92 was our resistance last week. We kind of broke above that. I'm going to write down two levels, and you know, I'm going to guess that this week we're not going to challenge either side of this. I'm just guessing that right now, unless we see a huge risk off scenario. I just don't see it. I think that 91.40 to 92.50. That's it. We continue to buy dips here. I'm going to keep it in range for now, but I still think it's a bullish setup. And I think a break above 92.50 is obviously very bullish. Okay. Hold on one second. Okay, so there's the dollar index. We did the S&P. Let's go over to the gold, silver, and Bitcoin. You know, Bitcoin's been trading kind of heavy. Which obviously, I do not. I mean, I maintain the outlook that as long if Bitcoin actually drops through, you know, this ascending wedge support, it's going to be bearish. So, first support level at this point is going to be, let's just call it 55,000. And this head and shoulder is not really playing out, so we can get rid of that for now. We never even tested the neckline really. So 55, let's just call it 55,000. That's pretty key. Now, I'm not going to get really bearish Bitcoin until we break 52,500, which is right here. This is where I turn bearish, but we keep rejecting 60,000, and that's important, because if you're bullish, you're probably going, oh crap, you know, how can we not break above that? But I think this is going to be kind of important support. And like I said, Bitcoin's trading a little heavier right now, and that's going to weigh on risk appetite if it breaks. Silver, same as last week, 24.80, 26.80. Gold's bearish still. Or below 1760. This, let's get rid of this for a second. Support is 1720. That's key resistance. 1720 is just intraday support. All right, I think that's it. Oh, look at the dollar, it's getting firm here. It's not because of equities. Is it because of yields? Well, yeah, actually yields are bouncing and the dollar is responding almost across the board. All right, well, I think it's a quiet day. Hey, Steve, Stelios, are you guys here?
Yes, mate.
Nope, I'm asleep.
Yeah, I know. I mean, I was telling the guys earlier, and I'm not sure if you were listening. I haven't even updated any charts or analysis this morning because since I've been awake, I mean, all the moves happen in Europe. So when I got up, it's like, okay, well, the euro's kind of, it's rallied like, whatever, since the open, really. I mean, since Europe, we rallied like 50 pips. But it's like we weren't up against any real key resistance. The only mover's really been the sterling, and I still think the euro pound looks pretty bullish. But I'm sitting here going, there's not a whole lot going on right now. But maybe
I really have nothing to talk about.
No, maybe North America is going to surprise us a little bit. Maybe these are the days where I typically feel like nothing's going to happen. Those can be the days that, just surprise me. So
yeah, let's hope
maybe,
so.
Maybe it's Bitcoin. Bitcoin will be the driver today. So anyway, I don't know if you guys have anything specific you want to talk about, but I covered everything I needed to cover today. But I want to say, guys, thank you so much for your support all the time. For those of you that are ForexAnalytix subscribers that are listening live right now, obviously we post these videos to YouTube like a day later. So if you guys are, for some reason, tuning in and watching the recording, come join in at ForexAnalytix so you can listen to this analysis live. I know not today is not the most exciting day to be doing that, but that doesn't mean the daily roundup won't be, or being in our chat room won't be. So guys, I'm going to pass it over to you, and I'll catch the rest of you in the chat room or during the daily roundup in a few hours.
Thank you, mate.
Thank you. It's been a few weeks now of very little changing, at least not in the macro picture. And I was hoping that yields climbing higher would change something, but nothing really concrete yet. Maybe if they continue, I don't know, but it's very frustrating. I have very little positions on, and
the yield thing is an objective thing. So, in my opinion, it doesn't really matter that much if it keeps being orderly or not. Yeah. But at some point, under the current environment, yields will start affecting negatively the stock market, which is the only thing the Fed cares about. Because there is no real economy to care about. It's all about, this wealth effect and, keeping the pretense. So, so far the move higher has not been like disorderly, but I don't think after some point it will really matter. So, if we keep creeping higher, it will have to matter. Now, I'm still having to do with this. I'm still monitoring this ascending channel, and I either want to see a rejection or a breakthrough and an acceleration higher. I think either of these two are going to give us direction for the days, probably weeks ahead. So far today has been an extremely quiet day. Nothing really has happened, in more or less including Friday. I mean, Friday and today so far have been really boring days. We haven't seen a real game changer for the dollar, for risk assets. Blake mentioned, the cable yeah, the cable looks in the short term rather bearish. I think it can produce another leg lower. And even if you look at the gappy, I'm tracking, I mean, one of the interesting charts here, I'm tracking this breakdown from this ascending wedge as we came very, very close to this ascending channel trendline resistance. So in the short term, it looks like an interesting, with this RSI divergence, like an interesting short position. You know, other than that, as I said, metals have all stalled at the first area of resistance they found. So they might, you know, they might be susceptible to another move lower if the dollar breaks higher from here. So far, this looks like a nice consolidation. So, you know, we might see another leg higher, but we need to see this happen first. So, you know, it is what it is. Friday and so far today have been very boring days in the stock market. We had a pin bar on Friday. So far today we have a short white candle. So I think we're going to need to get something more than that for the markets to stop yawning, as I almost did. Yeah. Let me see. What else do we have? If somebody has some specific question, let me see. Palladium, yeah, we talked about Palladium. Palladium, I think, has legitimately broken out, and as long as it stays above 2,500, here it is. So Palladium has legitimately broken out from this big symmetrical triangle, and as long as it stays above 2,500, I think it's bullish. So, you know, next stop, let me see. Yeah, next stop is, let's see where the high is. There, 2,879, the high. There it is. And then we're targeting 3,256, which is the 127% extension of the triangle's range. So above 2,500, you know, I think technically it's very, very clean and clear. Now, having to do with platinum, I also think that this consolidation is clearly corrective in nature, but within this consolidation, we can easily see a lower low before higher, right? So pay attention to this. Now, the rest of the metals here is copper. Is this a bull flag? Might be, because there is, you know, alternative interpretations. I mean, this might also be a triangle, right? There it is, a symmetrical triangle. But in any case, I think it looks, for the time being, it looks bullish. Now, in the context of a possible bull flag, it can produce also a lower low, right? So, you know, pick your poison here. I don't know which of the two. And we won't know until we see some more price action unfolding. Either of the two happening here. And here is nickel in some type of a consolidation, which, you know, nickel looks a lot weaker than the rest. So I would be very, very careful. I think nickel has more weakness ahead, one way or another. This doesn't look like a bottoming pattern to me in any case. So keep that in mind. Still check the gold copper chart. Someone pointed out it's turning. Sure. I mean, why not? Let's have a look at it. Turning? Definitely not turning. It's extremely bearish. Yeah. So far, this looks to me like a symmetrical triangle, and that points to further losses. So I don't think anything is turning here, not with what we have in hand at the moment. I think this looks very bearish. This doesn't look like a bottoming pattern either. We just worked out the oversold conditions, and it looks to me like it wants to go lower. So yeah, I would disagree with the, you know, with that interpretation, at least not with what we have currently in hand. USD NOK still Listen, USD NOK I think is very, very simple. As long as we stay below 865, there is no reason to be bullish. Now we break above 865, then yes, I think we're looking at it, at a stronger rebound toward perhaps the 200 daily moving average. But no reason to be bullish until that happens. This might easily be another bearish consolidation, right? Because don't forget, the trend is your friend and the trend is lower until proven otherwise. And, other than momentum loss, nothing else has changed for the time being. We only have a series of lower highs, which is the definition of a downtrend, right? Since we picked last year, a year ago. Natural gas, yeah, absolutely. Let's have a look at it. Where is it? Here it is. So natural gas seems a little bit interesting here because this might be actually trying to bottom out here, right? We found support at the confluence of the 200 daily moving average and the 50% fib, so keep that in mind. And let's see if this is a descending wedge. As long as we're trading above this previous channel, I think the trend is higher, right? So natural gas looks interesting from a risk reward perspective for a long here. Yeah, sure. Let me see this ticker. Yeah, last time we had a look at it, we were there from what I see, and I said at some point the corrective move lower and higher. Here's your corrective move. It unfolded in a clear triangle, right? A nice pennant here. There it is. And we did continue higher. You see? So yeah, it remains in a clean uptrend. Now, we're seeing another consolidation here, but as we said the previous time, consolidations are very natural even in strong trends. So a consolidation is not a reversal, right? We need to see a lot more to call this a reversal. So, it stays in a bullish trend unquestionably, but how can you buy it up here? I mean, you can't. I mean, where's your risk? And what is your target? So, it remains an uptrend, but in my opinion, not wise to buy it because, you don't have a risk reward that is workable, right? I mean, of course, you can follow the FOMO method, which is like buying whatever has been more overbought. And, for the vast majority of times that works until it doesn't work and then you lose everything. So, that's why I'm against that. Yeah, it's missions. AB equals CD is completed. Okay, yeah, okay, I understand what you're saying. But, extensions are very weak reversal signals. You know what I mean? I've said that before. I mean, when the only thing you have to look at is not prior support resistance areas, but just extensions of previous moves, I never trade off that. Never. I consider it, very weak technical evidence. It works less times than it doesn't. So for me, that's not enough. If it is for you, and your risk reward, go ahead and trade it. But I wouldn't. Steve Fang stocks look close to support, getting ready to drop. Let's have a look at them. Here they are. Yeah, for the time being, look, this whole corrective move doesn't really look like, an impulse, right? It's like another bullish consolidation, it looks to me. So, yeah, I think the path of least resistance until proven otherwise is higher. Now, where could you turn bearish is the next question here. I assume I don't know, this is a weak trend line to be honest, but to start with, you could look for a move below that, but I think, the stronger indication would be a lower low, which would mean a low below 1134. So I think at the very least, a lower low is going to be needed to look lower. Until then, I think the path of least resistance is higher towards 1,404, the 161.8% extension of this move lower. Okay, let me see if there is anything we left unanswered. Now, having to do with Euro Pound, I know that Blake talked about it before, but somebody asked about it. So having to do with Euro Pound, my thesis hasn't changed either, which is, we were in a downtrend, but look at how many times we tested the 78.6% fib and it kept holding, as well as RSI diverging at the same time. Now, today, we seem to be making an attempt after a long period of time to break through this channel that has guided this move lower. Undoubtedly, in the short term, that's going to be a bullish development, right? So, I think we close above this channel. We open up the door for a move up towards 88.40. So, a 200 pip to the upside, I think becomes a very likely scenario if we close on a daily closing basis above this channel. And then your stop loss can be below the lows, which we tested multiple times and failed to break through every single time, right? So quite a favorable risk reward ratio. Let's say you close at 86.50, right? Then you have what, a 120 pip stop loss, more or less, with a potential of almost like a 200 pip upside, better than a 1-to-1 risk reward ratio. Not bad. Not bad. So yeah, that's a possibility here. But, let's first see a daily closing candlestick above this channel, before we can get more enthusiastic about this, because intraday, many things can happen. And by the end of the day, you might, completely retrace the day's movement. I mean, it's not going to be the first or last time we see something like this, right? So keep that in mind. Okay, guys and gals.
Great.
Have a wonderful rest of the day.
Thank you, Steve. Thanks,
Bye,
everybody.
Stella.
Bye.